one of the things you're doing is building data centers, for example, and having to invest heavily in that space. Obviously, there's component parts that are coming in from China and all over the world, and how you think about that, for example.
Well, every finished good that's got any degree of complexity in it has parts from all over the world. And that's been true for a while. And actually, in our AWS business, really starting about 5 years ago, we very significantly diversified our supply chain. And so we have components that are from everywhere. It's not just one country. But we have such high demand right now for AWS, and the AI growth is so significant that we don't see any attenuation in demand, and we're going to keep building. And so
it would be no, depending on what happens with the tariffs, there would be no change to that view.
I don't see us attenuating our building data centers right now. We have very high demand.
Can I ask one related question on terms of data centers? One of the other sort of major shocks to the system was now a couple months ago was the creation of DeepSeek, which was this new large language model that people thought was remarkably more efficient. And there was this view among some that said, maybe we don't need all of these data centers, or we're not going to need all of this processing, as much processing power and as much energy as some had forecast. Did it change your forecast at all when you saw that?
No. I mean, in some ways, we would like nothing better than to make the cost of AI meaningfully less expensive for customers. The cost of AI today, because of the chips and because of the cost of inference still, even though those have, the cost of inference has come down several times, but it's still more expensive than it should be and than it will be. And then what you need for companies to be able to deploy AI as expansively as they want. And so when DeepSeek came out with this model, which people were excited about, it felt like it cost less, it felt like the inference was less. I think if you're building frontier models like we are as well, you're all working on a lot of the same types of problems, and you're going to see all this leapfrogging. You have seen all this leapfrogging every month, and you'll continue to see that. But for me, the lower that we can make the cost of AI, the more customers are going to use it. And I think people get confused. I saw this in the beginning of AWS too, which is customers love when you take the cost per unit of something down. It allows them to save money on what they're building, but they don't actually spend less. It actually unleashes them to do a lot more innovation, and in absolute, they spend more. It's the same thing when we started AWS. We pretty significantly changed the cost of compute and storage and database. Customers loved it, but they actually spent more on infrastructure because it allowed them to build more for their customers.
So, but that's something you talk about a lot in the letter, bringing down the cost of compute when it comes to AI. And obviously, you also make an allusion, I don't think you use the word NVIDIA, but I know there was maybe a frenemy, partner, and a competitor at the same time. They have controlled this marketplace for a very long time. What do you think has to happen to bring the price down? Because I assume that's going to come from you and AMD and everybody else who's going to try to do this. But how quickly does that happen?
It is going to happen. I mean, first I would tell you that if you sat in the meetings with the AWS team right now, they feel like it's their responsibility and their mission to make the cost of AI meaningfully less for customers than it is today. And I think there are two big drivers of it. One is the chips. And, what's interesting is most of the spend today in AI has been on training, these giant training runs.
Right.
But when you get to scale of the production applications for AI, it flips. And the overwhelming majority of the spend is actually on the inference, which are the predictions from the model. And so the two things that have to happen is the price performance of chips has to be meaningfully less, and that's part of why we built our own chips. We have our own custom AI silicon called Trainium 2, where the price performance is 30 to 40% better than what's out there in the current GPU instances. So we're working on trying to take the cost of chips down, and you have to take the cost of inference down. And that has to do with a whole bunch of things, including techniques like distillation and prompt caching and how you handle different model architectures. So it's both the chips and the inference. They both need significant cost decreases, and we're working hard on that.
NVIDIA met with the president, but no call.
Yeah.
I'm just saying that shouldn't you, like the president, say, listen, it's time to buy Microchip?
No, but NVIDIA was up, 18% yesterday. Tesla was up 22% yesterday.
People were short.
They were short so much.
I mean, I was talking to someone the other night, and the guy says, you know what? I'm shorting everything you talk about. I said, what, like my wife's party on Friday? You're shorting the party? I mean, like, come on.
It's going to be a
everything
great party.
You talk about, I'm shorting. That's what the guy said. Everything. I mean, I was talking about the Phillies.
All right, let's get back to this conversation we were having about. By the way, the conversation we used to love. I miss those days, don't you? Where we just talk endlessly about NVIDIA and AI and the need for obviously more and more data centers and everything that goes in them and how quickly things will move forward on AI and the need for power and that being the gating issue. Don't we all look back so fondly on those days? So let's revisit them. Andy Jassy was our guest on Squawk Box earlier, and this is what he had to say in terms of demand for AI and what goes on in data centers.
We have such high demand right now for AWS, and the AI growth is so significant that we don't see any attenuation in demand, and we're going to keep building.
And so it would be no, depending on what happens with the tariffs, there'd be no change to that view.
I don't see us attenuating our building data centers right now. We have very high demand.
I like the use of the word attenuating. So
attenuated is business word. Do you remember that when AWS was selling, they were worried about attenuated commitment of their clients. Attenuated, I'm going to add that to along with ill-advised, along with suboptimal.
I think you should. I like the word. But what it means is, hey, we're going to build it. We're going to build it now. We're not stretching out deadlines. Right. We're going to work. And again, as we said, Alphabet's saying the same thing. And so, I don't know, Jim, does that mean at some point we're going to get back to the AI trade, or is that kind of over and done with?
I think we're very, very much going to come back to it because the video has not been included yet. And video is high and it's high in NVIDIA, dude.
You know,
OpenAI's
image generating app or bot or they added 100 million users at OpenAI. It's a private company.
And yet it's not even that good. They rejected half the stuff I sent them.
It was so expensive and it burned out so many chips so quickly, I think they want to stop it. I mean, what I understand is, 100 million users cost them 25 cents each image.
A quarter we'd be able to fix
each
that.
Image.
All the data center stocks are down. Okay, so David, I use ChatGPT, Grok, Claude, Gemini, and Perplexity. And Perplexity has leaped over Grok in terms of being able to do great things. But I tell Grok, listen, I want it in Jim Cramer mode, and they have been able to duplicate Cliff Mason, who's my nephew and my head writer, my only writer. So Grok is able to imitate you, but Perplexity is coming up with answers that are lightning speed. I mention all this because every one of these needs to spend more money with NVIDIA. Because, David, this is a winner-take-all, loser-take-none. We're not all going to just use every single one of these.
Well, that's a good question because, and you may say that's the case. Others disagree. In fact, I think Satya Nadella, and this is some time now in a podcast, said, no, given the scale of this, everybody's going to ultimately benefit and win. That there isn't going to be the winner-take-all.
Yeah, but I don't want one that doesn't update. We need, but if you get them.
And by the way, Jim, you keep talking about the consumer application, but really it's going to be the enterprise where the real money is conceivably made, isn't it?
I agree with that, but I'm testing these every single day, and right now Perplexity's got the edge on Grok, which had the edge on ChatGPT, which had the edge on Claude, which had the edge on Gemini.
And one will be moving ahead of the other in some way, another, but it's going to ultimately be all the different kinds of applications.
Like, I never sat here and I said, David, have you tried Bing? Bing, like White Christmas?
Hey, David.
I can only imagine what you're dealing with in terms of your clients, given just every day kind of being whipsawed. But let's start off with the AI trade, if we can, something we've talked to you a lot about. We've had Jassy on our air talking about no slowdown in demand, so we're not attenuating the data center. Alphabet coming out, reconfirming sort of CapEx, even Microsoft. Are you a believer? Are those good signs? Did things get back to what we thought they were?
Well, there's good signs. Like, I liked what Jassy said today. Also attenuating, I love that word. But I don't think that they are slowing down at Amazon. I don't think they're slowing down at Google. That's good. Microsoft's a little more debatable.
Yes.
They're kind of, they are a little attenuating a little bit, maybe, potentially.
That's what we all kind of hear, at least, yes.
But it does seem like it's going to OpenAI and others. Oracle's picking up a lot of the slack. You see, David, there's a chance server prices really soar here, and storage and gear. So actually, the big clouds actually might be cheaper. So you might want to bring some workloads into the big clouds because on-prem gear could soar in price, and then they have a relative price advantage. So I if I'm running a big cloud, I don't know if I slow down right now because you could actually take more workloads.
So you think you're going to take more stuff off of on-premise, where a company is saying, all right, we got to move more stuff to the cloud because it's just going to be cheaper.
It's going to be cheaper. And heck, I mean, if you're a big bank here in New York City, you have no idea what's going on. So it's like, why not leverage the cloud? Maybe it's cheaper. Maybe they can scale up and down, and you focus on something else, because it's so uncertain right now. Why pay 20% more for gear on-prem?
Right. I mean, some things, like banks, some things they want to keep on-prem, I would assume.
Yeah, of course. Yeah. But it was an example. But the price shock that we're seeing, we're seeing HP Enterprise and some of their competitors raise prices on servers. A 20% shock is a big number.
Is that the expectation? I mean, obviously a lot of servers come from a lot of places around the world, all with 10% now. I don't know how many are made in China.
Quite a few. Quite a few. And everything goes through there. It's really hard to determine what's going to happen to the price of this on-prem gear.
Well, I mean, you can't 125%. I don't know what you can do. What you're going to do.
That's funny. Taiwan semi shares falling nearly 5% today, even as the chipmaker announced a 42% increase in first quarter revenue. That was better than Wall Street estimates. The stock falling with the rest of the semi space. The SMH ETF down nearly 7% today after posting its best ever day on just yesterday. Names like On Semiconductor, Intel, and Micron NVIDIA all being hit hard. Well, tariff turmoil also hitting the data center side of the AI trader. Christina Partsinevelos joins us now with more on this. This had been suspected that there would be some hits to the data center trade. Do we have data now?
Yeah, well, let's go through it. There's a lot. There's a lot of commentary, right? So the sustainability around AI spending just remains a constant concern. Yes, Google reiterated yesterday they would spend $75 billion this year on chips and servers. And yes, Amazon CEO Andy Jassy told CNBC early this morning that he didn't see them attenuating their building of data centers. Great word, essentially confirming no reduction in their $100 billion plans. I've never used that word in a sentence. But Jassy noted AI won't be as expensive in the future due to chip costs, implying NVIDIA either needs to drop prices or face alternatives, which Amazon hopes to step in. The Stargate AI project, don't forget them, from OpenAI, SoftBank, Oracle, plans to spend $500 billion over 4 years, starting with the construction in Texas, which should be completed by mid-next year. Microsoft reported plans to spend $80 billion in 2025, but yesterday, this is the news, walked away from the lease deals and delayed construction on sites, including a $1 billion Ohio project. So these mixed signals really are sending questions about this AI investment cycle's durability. Any pullback would impact chip suppliers like NVIDIA, we talk about, networking companies like Arista, real estate developers such as Digital Realty Trust. And then, of course, the big question you started with was looming tariffs. They really could force companies to reconsider CapEx plans. And that's why you have so many people concerned about Q3 earnings and what this signals for this $1 trillion AI build-out and hitting any speed bumps.
Karen, you're a big investor in a lot of these names that are investing in these data centers. Would you rather hear them
would
now?
Would you rather?
They're sticking with the CapEx spend, or that they're going to reevaluate due to the volatility in the market, just the unknown business environment?
I think that probably wouldn't be received that well, the unknown business environment. But because remember, it seemed like so long ago, but when Meta announced their first quarter and actually talked about the spend being higher, people like that, right? That they are seeing, we're going to get a positive return on that. And so that was good. I think them reversing course here. They make about a lot of money, even while they're spending so much money on CapEx. So I don't know. Maybe it's if I told you they said it, how would it react? I'm thinking down.
Yeah.
It's to your point, nobody's really commented on tariffs thus far, except there was the cloud infrastructure unit, the general manager at Google, and he said the cost of importing hardware might climb, but customer demand continued to necessitate the increased environment. So maybe we'll hear that they'll say demand is really strong, and so we're going to eat the cost, or they'll use tariffs as an excuse to pull back.
Right, big question there. Christina, thank you.
Thanks.
Christina Partsinevelos.
The one who gets hit on this is NVIDIA. All the rest are probably working on their own chips, to Andy Jassy's point. And you're going to wind up seeing NVIDIA fall, and the others could probably stabilize or rally because they're working on cheaper chips. The world doesn't need what NVIDIA is selling right now as sophisticated a large language model. They could do it with a lot cheaper chips.
All right, I hope you're all doing well today and staying calm in this market. The S&P finished the day nearly 3.5% lower, and NVIDIA finished the day about 5.9% lower. Today was a rough day in the market, but I think it's understandable considering how massive of a green day we had yesterday. As a reminder, the S&P was up about 10% yesterday. For perspective, the average annual return on the S&P is 10%. And we had a move that large just yesterday. And NVIDIA was up more than 18% yesterday. And so it's understandable that we would give back some of that gain today. Now let's talk about NVIDIA. As Amazon CEO Andy Jassy mentioned in one of the clips you just watched, Amazon has no intentions of slowing down on their AI CapEx. That is fantastic news for NVIDIA. As a reminder, Amazon intends to spend roughly $100 billion on CapEx this year. This is important because one of the big worries for investors right now when it comes to NVIDIA is the hyperscalers' CapEx guidance. And the fact that Amazon is not slowing down on CapEx is a very positive sign. It appears that Amazon and Google still intend to spend big on AI, which is great news for NVIDIA. Microsoft is currently viewed as somewhat of a wild card because we got news yesterday saying that Microsoft is walking away from some data center projects. But as I mentioned in yesterday's video, Microsoft told us about this situation on their most recent earnings call. Over the past few years, Microsoft had to spend a lot of money up front on things like land construction and utilities to construct the actual buildings of the data centers. And now, as some of those construction projects are completed, Microsoft will shift its mix of CapEx spending away from the external costs of the data centers towards short-lived assets inside the data centers, such as CPUs and GPUs. That is what Microsoft CFO Amy Hood told us on Microsoft's last earnings call. Also today, Sam Altman of OpenAI posted on X saying that OpenAI usage, and therefore AI demand, has gone nuts over the past month. But if you ask the internet for hundreds of thousands of more GPUs quickly, the internet will deliver. This is very bullish for NVIDIA. Demand for AI is reaching new levels, and companies still need substantially more NVIDIA GPUs to meet that demand. In the short term, I have no idea what will happen as we navigate through the macro and tariff situations. But from a long-term perspective, I think the thesis behind NVIDIA and AI data center build-out remains intact. I know that many analysts and managers on Wall Street are still questioning how long the demand for AI will last. But if we listen to the companies that are actually offering AI to customers, whether it's Amazon, OpenAI, xAI, or any of the others, we're hearing that they're seeing record levels of demand for AI and that they desperately need more compute. I think that is the truth of the situation here. And as the demand for AI increases, so will the demand for NVIDIA's products. In the short term, anything can happen. Even so, I am bullish on the long-term future of NVIDIA, and I think this company's brightest days are ahead. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.